All right, so welcome to another video and episode. And in today's video, what I'd like to do is give you some insight on which option strategies should you take a look at learning and in the process and order that you should go ahead and learn them in. Because a lot of strategies out there, but sometimes it's a little more efficient to learn things one way than another. So that's what we're going to do is break things down on, hey, what's the step-by-step process should you go if you're trying to learn many different option strategies out there. So stay tuned. All right, so as for trading options goes, I've worked with a lot of people over the years, and I've even done things where we go in and work with people one-on-one. So you can take a look at the coaching section here on our Traders Fly website. I've done things in the courses. So I spoke with lots of people over the years, and I seem to have at least understanding to the approach that people take to learning to trade options. And I'm going to give you my best understanding as for the process that I think makes sense for people when they're looking to learn many different strategies in trading options. So let's go on paper. I'm going to give you some thoughts about this. And when you go into trading options, obviously beyond the scope of understanding risk management, money management, how to put on positions, computer things, and all those other core foundational things, as for strategy goes, I think just the basics of covered calls and selling cash secured puts or selling puts are probably the nice basic spot to start with. In here, we're talking about single option contracts as well as buying and selling single contracts, but I wouldn't really stick into that area for buying singles on their own, really honing in and focusing on covered calls or cash secured puts as for a basic kind of wheel strategy to start out first. And the reason why buying singles, when you're talking about buying single calls or buying single puts, I wouldn't stick with it is because a lot of people get burned from the theta or time decay. And if you're trying to do that in a real account, that can be a little bit of a problem. To practice it, to understand options, I think it's good at the beginning, but as for sticking to a certain strategy, I think you should get away from that with time as you understand and learn more about a general strategy like covered calls or the wheel strategy. The downside behind this is much more of a bullish strategy, and if a market does not go up, this can be a little bit of a problem. So I'd be a little more careful there. Now, moving forward beyond this, okay, so what's kind of the next thing? Okay, after this, I would go in and take a look at verticals. Verticals are a great next point because now what you're dealing with is two option contracts. Okay, you go ahead and you sell one, buy one, or buy one, sell one. So you basically are creating a spread where you're combining a call and another call, or a put and another put. So it's not too bad going from the basics of that, but it starts to step you up into multi-leg spreads. I actually just released a course not too long ago on vertical spreads. We just did one on iron condors, but here's the vertical spread course on our website. And I think it's like 20 some hours long with a lot of different examples. So I highly encourage you to check that out. Okay, so beyond the vertical spreads, what's after vertical spreads? Well, once you have one vertical on one side, then another vertical on the other side. So this is number one, this is number two. Number three would be iron condors. Okay, when you look at it, why? Well, because iron condors has a left side and right side vertical spread, and now you're combining it, and now you've got an iron condor. So you've got verticals, then iron condors. Then what's after an iron condor? Well, after an iron condor, you've got a butterfly. Well, what's a butterfly? Butterfly is basically an iron condor combining one vertical. Then you've got another vertical overlapping it right there. And that creates a butterfly spread. Pretty cool, right? So that's why when you look at it, it's starting to build one on top of another, right? You got basics when you're doing covered calls or the wheel strategy. Then you've got a vertical. Then those verticals turn into an iron condor, and an iron condor compressed turns into a butterfly. After that, we've got calendars, which is now gets a little more difficult because what a calendar is, you're selling something, let's say 20 days out, and you're buying something maybe 30 days out. So you have multi-month. Okay, when you have multi-month or multi-expirations, it gets a little more tricky. And then the last thing would be kind of more diagonals or double diagonals. So when you start looking at that you've got multiple months on top or multiple expirations, and then you also have different strikes as well. Whereas a calendar is the same strike, diagonal will have different strikes and different expirations. So those are kind of the process that I like to work with people as for learning the different strategies. Now, in between there's other strategies like a mix or a combination of this, like a protected iron condor or a back ratio spread, which is a vertical with an extra leg. So there's kind of hybrids in between this. So this is kind of like core strategies, but there are, of course, other subset strategies that are maybe a little more, shall we say, in between these. For example, like selling a strangle would be kind of in the iron condor section because you're selling one and selling one, but then you're buying protection over there. So it kind of fits in the iron condor area. So this is the approach I would take if you're looking to trade options. It's kind of a good starting point. Obviously, I've seen people hop around in different ways. For example, learning the basics. That's kind of another thing. And then I've seen people go ahead and do calendars right there, because for some people that's easier to grasp, where the faster time decays and then you're buying a longer dated one. That also can be okay. I've seen other people hop to iron condors pretty quickly as well. But again, it's a basics behind verticals. So I'd just be careful going from the basics and going into a diagonal. Sometimes that can be a little tricky. I've seen people do it and it's been okay in many cases, but I'm just saying on average, like in most cases, I would take kind of this approach. Step one, get the basics, then go to verticals, then go to iron condors, then butterflies, then maybe calendars, then diagonals. And I've only, looking at it this way because I've just worked with so many different people, in different ways where they come from a background. So what happens is people come from a certain background. They say, hey, I'm working on diagonal spreads. Can you teach me, the basics all the way to, the most advanced things? So when I work with people like that, like here, you could take a look on when I trade with people 9 months plus, we go ahead and put on sample trades. So what I do is I see the background that they have where they've kind of started with, let's say, diagonals or butterfly spreads. And then when they take that approach, I get to see, well, how comfortable are they with doing that, or how good of a foundation do they have? And because of that, I get a good idea and insight on, hey, what kind of is working for people to start out with and what doesn't. So from my experience, I've been kind of teaching people in this manner because it seems to work out a little bit more fluid without too many hiccups. There's always going to be issues and hiccups, and maybe in some cases it does work out better for this individual person to hop from strategy 1 to strategy 6, whereas for other people I would go strategy 1, 2, 3, 4, 5, 6 in the proper order that I just showed you. But in many cases I'd say this is a good path, whereas for some people, go here, then maybe go to calendars or diagonals, and it'd be fine. But in most cases, I take a look at this approach. Anyway, I hope that helps, gives you a little idea or guidance, at least some method of a plan of how to approach things and which way to go. And that's just the process that I would take, simply because, it's a good path that seems to work out for many people. So I hope that helps. Check out the courses if you're more of a DIY person. And if you like to work together, there's coaching and mentoring where we work with you 3+ months on your trading. And just feel free to reach out. Be happy to help you out and work with you. So thanks again for joining me, and I will see you in the next video and episode.